MicroStrategy just dropped some amazingly poor news about what could happen with the indices like the S&P 500 here in the near future. But it's very fishy because three things happened with JP Morgan and BlackRock that now can unveil that they potentially knew what was going on with all of this. Now, it is somewhat of a Bitcoin roller coaster, so to speak. But what did JP Morgan know, and why did they mysteriously dump 25% of their entire shares right before this news? Now, we're going to dive into all of that and what else JP Morgan potentially did here. But first, of course, we've got to dive into this recent ruling from the MSCI. So, for those who don't know, the MSCI essentially determines whether or not a company is suitable to join indexes like the S&P 500. And the MSCI determined that strategy is a fund or a potentially trust or potentially a holding company, but not a publicly traded operating company like they claim to be. Now, of course, Michael Saylor put out this response saying that, hey, we've completed 5 public offerings of digital credit securities representing 7.7 billion in notional value. And they've launched all these different products. Funds and trusts passively hold assets. Holding companies sit on investments. We create structure, issue, and operate. Our team is building new enterprises. But the index classification doesn't define us. And we've also had strategy come out and say that they're going to continue and buy. But as I alluded to in the intro here, I've shown you guys this chart for those who have been around for a while. Make sure you guys are hitting that subscribe button if you have. If not, and your first time joining me, well, welcome and get used to seeing this because I think it's really interesting watching JP Morgan's flow and how they've been essentially, they loaded up at the beginning of this year. And look at the amount. They essentially tripled their holdings in one quarter. And then all of a sudden, right before this ruling, they've lowered their entire holdings by 25% with all of this. So it begs the question, what did JP Morgan know? And this timing seems essentially coincidental. It almost feels like it is rigged, so to speak, just because of how coincidental this timing is. And it wouldn't be surprising to me to know that JP Morgan would know all of this and have the inside scoop. But there's something else that makes me believe that maybe these two giant entities, we have JP Morgan on one side and BlackRock on the other side, are potentially at odds here. And we've got Vanguard also somewhat in this mix as well, as they all of a sudden became the biggest MSTR holder of any institution because of these indices. And they've been very Bitcoin resistant. Now we're going to get into all of that. But first, let's continue to dive in on JP Morgan because they came out and said that this MSCI decision could force strategy out of the top equity indices. Now, what is strategy in right now? Currently, it is in the NASDAQ or the the NASDAQ 100, the MSCI USA, and MSCI World. So it's in these 3 different indices that get a bunch of passive inflows. And of its 59 billion market cap, 9 billion sits in passive vehicles like ETFs. So it's very interesting as we see JP Morgan strongly come out and say, oh, watch out for strategy. They're going to crash and burn shortly after they've been dumping all of their stock. It seems very coincidental when they're saying strategy currently part of these indices and up to be in the S&P 500 for the second time in December. Now all of a sudden, this timing seems very fishy, right? So MSTR is dumping that all right before they all of a sudden know, hey, this MSCI ruling, well, it would negatively affect and allow or not allow MSTR to be into the S&P 500. And how much in passive flows, if it were to join the S&P 500, would it get? I mean, it would get literally 7.7 billion in passive investment flows. So a ton of money would be coming in. And then, of course, we've already got 7.7 billion in publicly traded offerings that MSTR has raised on notional value. So just coincidentally, it would essentially double the amount and they would continue to buy. And I mean, Strategy, if you've seen and been following all of their buys, they've literally been buying every single week for nearly a year. They've taken 2 weeks off this entire year. They've bought in Bitcoin every single week since Donald Trump got elected. They went from 42 to 87. So what is that? 45. So maybe 7 weeks they didn't buy. So it is absolutely something that we would see MSTR just utilize all of these S&P 500 passive inflows to just dump into Bitcoin, of course. But now it may face billions in outflows. And this is what JP Morgan is suggesting, right? That the stock is essentially screwed. It's left for dead because now we're starting to see people have doubts because it won't be included in that S&P 500. So, of course, Bitcoin doesn't care about all of this, and MSTR will most likely keep buying. But why all of a sudden are we having such resistance to Bitcoin when we've had BlackRock get in and have the most successful ETF launch in history? And we've had others start to come in. And we've actually had Jamie Dimon and JP Morgan come out and say, I was wrong about Bitcoin. I was wrong about all of this. But now JP Morgan and Jamie Dimon all of a sudden say, oh, we're right. We're wrong about Bitcoin. Let's go in. And then we see some massive dumps come in. But on the flip side of it, what else did we see here? We see BlackRock actually keep their holdings relatively flat, but actually increase just oh so slightly. So why is BlackRock all of a sudden increasing its holdings while Jamie Dimon and JP Morgan are not? It's very interesting when you take a step and look at all this because we've seen some massive numbers in these publicly traded companies. Sure, we've only seen 4 new ones come on in the past 30 days, but since Donald Trump got into office, we had 64 publicly traded companies that had Bitcoin on the balance sheet a year ago. Now we have 209. So this number has gone exponential, and it continues to rise up. And so BlackRock is still stacking MSTR. BlackRock mysteriously did sell off a lot of Bitcoin out of their ETF right before this Bitcoin dump. And then JP Morgan mysteriously sold off a lot of MSTR right before this MSTR lack of inclusion in this MSCI ruling. So it seems like this game of financializing Bitcoin seems to still be there. It seems like we cannot avoid Wall Street coming in and financializing these various products. And we've had another player start to come in as well, Vanguard, coming in and being the largest institutional holder of MSTR. But what has Vanguard done? They have slammed Bitcoin. They've been one of the biggest Bitcoin haters there are, one of the biggest Bitcoin bears. They've essentially come out and said that they think it's just trash, similar to what Jamie Dimon has said. But then they become the biggest MSTR holder thanks to their index exposure. So now there must be jumping for joy because MSTR cannot join any indexes or might not be able to. So Vanguard and all of their clients now might not be able to get exposure to MSTR because of this. I mean, of course, if you really take a step back and look at who are the true holders of MSTR, I mean, you'll find it. Sovereign wealth funds, pension funds, you name it. The Norwegian sovereign wealth fund, the Abu Dhabi sovereign wealth fund, all of these big money players are all holding MSTR. They've been using it as a proxy to get into Bitcoin. But now that they have the BlackRock IBET ETF, and some other access and some ways to get exposure to Bitcoin, well, why do they need MSTR? I mean, it's interesting because if you look at how MSTR is essentially laid out here, right, looking at potentially $9 billion of outflows and that risk here, everybody is trying to dunk on MSTR with this recent crash, saying that, hey, you know what? They're going to have to sell off their Bitcoin. All the FUD that you could potentially see with all of this. I mean, it's absolutely ridiculous. So I honestly think that the longer you take a look at the way that this financial game is played, the more that you think that these whales and these big players are working together. And hey, I mean, as Jazz is saying, all those big whales ganged up to suck up our money using a pump and dump scheme clearly planned. They're using our money to fund the whole scheme. They don't have to use their money. It's true. I mean, I agree with you. If you really take a step in and look at all of this, right? It's all of these shenanigans that we're seeing. All of these big money players coming in are going to try to force MSTR to sell their Bitcoin. And they're not going to have to, right? Everybody's going to be saying, oh, you know what, to fund their dividends and all these different things. I mean, MSTR, like Bitcoin would have to crash to like basically 10 grand for them to start selling their Bitcoin. So I think if you guys are looking to unlock some purchasing power, you don't need to do that. You should be able to avoid selling your Bitcoin at all costs. One of the best ways to do that is with my friends over at Salt Lending. You can go to saltlending.com/green-candle. They're giving you guys an exclusive offer for Green Candle listeners. So you have to go to this link. And then once you fill it out, you can use the promo code GCSALT-01. And I'm only going to say it. I'm not going to write it down in there. But GCSALT-01. So if you go to saltlending.com/green-candle or the link down in the show notes, they'll give you 50 basis points off their best rate. That's outstanding, folks. That's a lot of money, especially over a 12-month period. And when they're already starting the best rates at 8.95%, I mean, it seems like a no-brainer. Do you think Bitcoin is going to go higher than 8.5% over the next 12 months? If you don't, I don't want to be friends with you, folks, because I think that we're going to, probably pass 90K in the next 12 months, believe it or not. So with that, they've also got 12-month duration, 70% LTV, and no prepayment fees or credit checks. And if you're worried about Bitcoin potentially going down even more, they've got a Salt Shield, the no liquidation solution, so you don't have to worry about the short-term price action. And what I think is interesting is that, with Wells Fargo saying they've seen the rise of companies holding Bitcoin on the balance sheet. I mean, this was an article from July. And for those of you guys who keep coming back, make sure you're hitting that subscribe button for me as well. And smoke that like Cheech and Chong, as we got the GOAT all-nighter hider in the chat. But Wells Fargo came out and said with all of these different offerings, Strategy is trying to tap into the $300 trillion global bond market with Strike and Strife. And it might be the most underappreciated story of 2025. And Jamie Dimon came out and said that the bond market is essentially screwed. That the bond market crash, well, it's quote, I don't know why they want to show me some women's underwear ads. I'm on my parents' Wi-Fi, so maybe my parents have been. My mom is looking at things for for herself. Oh my goodness! But it's going to happen. J.P. Morgan CEO of Jamie Dimon warns of the cracks in the bond market. Dimon, who was interviewed on stage, he said that there's so-called bond vigilantes that sell U.S. Treasury due to worry of growing deficits, right? So Jamie Dimon has been worried about these bond vigilantes and the bond markets. And then Wells Fargo is coming out and saying, hey, you know what? If you really take a step and look at the overall bond market, well, Strike and Strive, MSTR products, they're coming for them. And so maybe this is a coordinated attack against MSTR. Let's look at the facts. I'm lining out a timeline of events. Do with that information with you what you will. But Jamie Dimon and JP Morgan sell off 25% of their entire holdings of MSTR. Then magically, after already been included in 3 indices, MSTR gets an MSCI rating that doesn't allow them to be in indexes like the NASDAQ 100 or the S&P 500. They're already in the NASDAQ 100. So after that, then BlackRock mysteriously is buying a little bit more after already having to file for owning over 5% of the entire company. And then Vanguard, who is very against Bitcoin and has already become the biggest institutional holder of MSTR. Everybody was thinking, oh, they're bending the knee. But now they're looking at all of this and saying, okay, well, maybe, just maybe, we can find a way to keep these guys out of indices so we don't have to keep the charade going. So at the end of the day, I really think that all of these big players, they're going to look at this as a potential to attack and limit what is going on with MSTR, because MSTR has been the biggest player. Let's face it, right? I mean, if you really take a step back and look at all of the Bitcoin treasury companies, right? They're not going to be able to sustain what MSTR is doing. At the end of the day, they can't, right? MSTR has a huge, huge moat. All right, let's take a look at, these total, right? There's MSTR has nearly 650,000 Bitcoin on the balance sheet. 650,000 balance sheet. Total of all publicly traded companies is 160 or 1 million, 64,000. So MSTR literally has more Bitcoin on the balance sheet than every other publicly traded company combined right now. So this moat between 1 and 2 is absolutely huge. It's insurmountable. Nobody is going to be able to catch MSTR because they started so long ago, right? So because they started so long ago and they've been, able to create such a moat, well, they can do all of these public offerings like Strike, Strive, all of these different indices that Saylor mentioned in his original tweet. But what does traditional finance know? Traditional finance knows and sees that all of these other players, they're going to start to come in and try to do the same thing. We're seeing it from Metaplanets. We're seeing it from all of these other companies. We're seeing Bitcoin miners start to hold on to Bitcoin even more. But what did we see last cycle as well? We saw a lot of Bitcoin miners leverage against their mining equipment and all of them blow up, right? Because everybody thought, oh, this is the new hot trend. Let's just take loans and do all the, take leverage against this to load up and buy more Bitcoin. And you had to ask yourself during that time, okay, this is interesting. Why are all these Bitcoin mining companies who it is their job to control the network, right? Why are they now buying Bitcoin instead of just trying to load up and get more miners over time? You had to ask yourself that. And that was what was going on last cycle. Now, this cycle, what are we seeing? Well, we're seeing a lot of companies essentially have no underlying business and just start to raise capital. I mean, all of the, a couple hundred of you guys through X and YouTube right now, we could all form a company and go to a bank and go, hey, you know what? We want to form the Green Candle Bitcoin Treasury Company, and all of us together combined would be able to raise more than one single entity, and then we could all go buy Bitcoin. Sounds great, right? As long as all of us can service the debt. Now, because we have so many of you guys across all the channels, I don't think I could personally service all this debt with just YouTube ad revenue. So make sure you guys are smoking the like and hitting the subscribe button. And that's beside the point, but that's what all of these companies are running into, is that they have no underlying business. They're just saying, okay, we know that Bitcoin is the way to go. We know that Bitcoin is the most pristine collateral. We know that Bitcoin is going to go up over time. But the thing is that it's very hard to predict. And we saw it last cycle where everybody saw the euphoria and Bitcoin miners were levering up. And it's happening this cycle. I'm one of them. I thought that we would be in a different position here towards the end of this year going into 2026 than we are right now. And I've had a great podcast where I'm really excited to publish for you guys tomorrow morning. So make sure you guys are subscribed with Checkmate. And he's going to reveal some things about this cycle that I think you guys are going to all really want to tune into. But it opened my eyes, right? Once everybody starts thinking that Bitcoin is going one way, it always humbles you. So this is why we just need to stay humble and keep stacking those sats and potentially do it in the background too. That's why I've partnered with my friends over at Simple Mining. You guys can go to simplemining.io/green candle. They're going to give you guys an exclusive offer. They're going to give you guys 1 free year of mining repairs, as well as a 7-day free trial if you just sign up using my link. The best part about all of this is that the guys over at Simple Mining, they give you KYC free Bitcoin. And look, let's be honest here, right? We want to see Bitcoin all succeed. Part of it is we need to keep control of the network and we need to help those mining rigs be up and running. So if you guys go into simplemining.io/green candle, you guys can get a piece of this network and start it working for you, right? And I think this is one of the most important and underrated things. You could get people stacking sats in the background. I'm about to get my first payout. I mine with Simple Mining, and these guys are the best, honestly. They make it so easy. They've got a great dashboard. Billy and the team, they're amazing. He just had twins. So, I mean, they're great family men. They're a great company. They're fully transparent. If you wanted to go and look at their, facility, you can go and do it. Maybe I'll go do a video over there or something, but these guys are outstanding, so I couldn't recommend them more. You could buy equipment from them. You could do all these different things, but go to simplemining.io, schedule a call with them. They're the best. And on top of it, we're coming into the end of the year, so if you guys have some tax implications that you want, well, you can get a depreciating Bitcoin miner. So be sure to go to simplemining.io/green candle. Maybe they've even got a Black Friday deal. I'm not 100% sure on that. Don't quote me on that. But either way, Bitcoin's got a Black Friday deal because we're still under that 85K. And I think it's really interesting how many people now have turned completely bearish on all of this, right? Seeing the Strive and all of these different indices, seeing these big players dump Bitcoin, I think it is very interesting timing. And let's not forget that this whole thing is very rigged, right? But the reality is that we're going to keep seeing a quote unquote perfectly timed indice, right? I mean, look at this. Just another perfectly timed institutional trade. JP Morgan and Jamie Dimon. Boom, all of a sudden 25%. Oh, wonder what this is. The MSCI decision could force strategy off of the top indices, and it would face billions of outflows. Wonder how they made it. At the end of the day, folks, all we got to do is keep stacking, stay humble, and stack those stats, right? Like my friends over at TFTC say. But the reality is we've got a lot of ways to go. Be sure to hit that like button and subscribe to the channel. I've got a great podcast with Checkmate, and I've been doing a lot of talking head videos, talking to you guys about how we're still extremely early. So be sure to check those out on the rest of the channel, and I'll catch you guys all at the next one.